Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another dividend portfolio and growth portfolio update. Yes, I'm doing them both in the same day, the same video today. And really, if you are new to this channel, these portfolios are all about helping you with seeing how you can grow your money even with a little money. So this portfolio, as you can see in the background, our dividend portfolio, we actually started this with only $100 and have been contributing $25 every week. And basically, we've been doing a similar strategy with our growth portfolio as well. And hey, you guys can see where we're currently standing right now, where our current value sits at $2,202.51. We started this with, again, $100. So when people say, oh, you need a lot of money to grow your money, hey, this might not seem like a lot of money to some people, but to other people, this absolutely is a lot of money. And if you can get your money to grow for you, if you can get your money to work for you, even if it's not a lot, well, it's better than nothing. And I will take it. So jumping right into it, as you guys can see, over the past week, we are currently up 0.74%. Over the past, that was the past day. Over the past week, we're up 0.90%. Over the past month, we're up 3.67%. Over the past quarter, we're down 4.11%. Over the past year, we're up 1.90%. In 1 year, we're up 6.37%, which gives us a gain of $83.86. Now, of that $83.86, you can see that $13.84 comes from the market gain, basically our stocks alone. So if those go up, those go down. And as you can see, we're up $13.84. But the main chunk of our earned gains that we're seeing right here actually comes from our earned dividends, where we've received $70.02 in dividend payouts. So let's dive into our actual stocks and see who's performing well, who's not doing so hot. At the top of the list, we got Coca-Cola at 33.38%. In random time, I was just actually listening to a Joe Rogan podcast this morning and had a gentleman who was talking about Coca-Cola's history. Very interesting. But also helps to explain why they are still around today, why they are such a powerhouse and still dominant. And after that, you have Pepsi, where PepsiCo is at up 31.74%. Then we have both of our REITs, where we have Newtek here at 25.57%, followed by Realty Income Corp up 22.19%. After that, we have Procter & Gamble up 21.82%, followed by Johnson & Johnson, who is up 18.06%. Then, unfortunately, in the red, we do have Verizon Communications, who is down 2.31%. Innovative Industrial Properties, our last REIT, is down 14.39%. JP Morgan Chase is down 15.13%, and 3M is down 23.99%. And so when we come over here and just look at our recent activity, you can see Coca-Cola paid us $1.51 in dividends. We had our deposit for the week here, $25. And then you can see more dividend payouts coming from Pepsi at $1.31. You have two from Newtek, where basically it's about $5 from them. And down at the bottom right here, you can see Realty Income at 75 cents that we received back on the 15th. 3M, $1.85 that we received. Johnson & Johnson, we received $1.28 back on the 8th. And that was it for the month of March. So as a whole, things are looking pretty good. And really quickly, I just want to also elaborate. Again, we started this portfolio back on February 1st with only $100, started to contribute $25 every week. And then we got to about March 5th, and you can see a spike. It goes up about $500. And this came from our stimulus check. When we received that money, we said we're not going to splurge it all. We're not going to waste it all on Chinese food and lobster and whatever. Get some fashion clothes or Gucci, whatever, some custom shoes. No. Wait, what is that? Yeah, I'm not gonna even try it. But yeah, I mean, it's all about when you get extra money, invest it. Because now you can see that that only helped us, that $500 contribution only helped us speed up this process of growing our money more quickly and getting our money to more of our money to work for us. As a result of that, now we're getting higher, more dividend payouts, more money because we own more shares, we own more stocks. And so when we look at our earned dividends, you can see, as I mentioned, $70 is what we've received in total. And out of that $70, majority of that has come from New Tech, who is killing it up here at $20.38. Then we have our second REIT, which is Realty Income, where they have paid us $7.11. Then we have Verizon Communications at $6.54, followed by Coca-Cola at $5.54, and then 3M at $5.27 to round up our top five. And one thing I do want to point out: innovative industrial properties is the newest stock, newest REIT that we added to our portfolio. And they are basically kind of involved with the, I guess you could say, cannabis industry, focused on real estate. And so like something like this, like I'm not worried about this, even if you come back to our actual portfolio and you can see that they're not really performing, all that hot right now, right? They're down here almost, third bottom on our list. But the key is knowing that, hey, cannabis still isn't legal on a federal level. Will it be legal in 10 years? I believe so. Will it be legal in 15 or 20 years? I believe so. I could be wrong. I could be mistaken, right? But either way, if you are able to build up a larger, investment with a company that is on the verge of an industry that's going to be legalized in a very near future, well, you can, I think it's a fair assumption. And, one of the four agreements is to never assume, but I think this is a calculated assumption or prediction that this is going to do pretty well once things do get legalized. And again, when they're down now, we're not worried. We continue to buy. And that's exactly what we're going to speak about also with our growth portfolio. But, to wind this up, I'm, loving how this portfolio is looking right now. Again, we started this with only $100, and now we're currently sitting at over $2,200. Not too bad. Not too bad. Definitely give this video a nice thumbs up. It does help show me that you guys appreciate and enjoy these updates. And hopefully it does help motivate you and get you inspired, and helps you to see that you can grow your money as well. Now let's jump into our growth portfolio update. So we are here in our growth portfolio. You can see we're actually down 0.13% over the past day. Over the past week, however, we're up 0.25%. Over the past month, we're up 7.18%. Over the past quarter, we're down 5.37%. 1 year, we're down 19.17%, which is the same as all time since we started this portfolio back on October 8th, 2021. And as you can see, our current value currently sits at $1,238.78. Our market gain, yes, we're down, right? You can see our total portfolio gains are down. And we have received 4 cents in earned dividends. Now, of course, this is a growth portfolio, so not really expecting to receive any dividends really. But hey, getting any kind of dividends is always a nice thing. It's always a beautiful thing. I'll take them. So when we look at our actual portfolio to see who's performing well, who's not doing so hot, you can see ChargePoint is at the top of our list with a 47.49% return. Then you have CleanSpark up 46%, followed by Navita up 18.07%, and then Backed Holdings up 1.03%. Then, unfortunately, in the red, we have Fuel Cell Energy down 26.14%, SEMrush down 27.83%, Coinbase down 36.73%, Palantir down 38.59%, followed by DraftKings, who is down 53.53%. Oof, so brutal, so brutal. But this is part of the territory. You can see how much our returns fluctuate when you go from, 1 month to 1 quarter all time. This is a very volatile kind of play, right? You're investing in companies that are newer, less established. they haven't proven themselves over the past 30, 50, 70 years, and so on and so on, like Coca-Cola or like some of these other companies that we just saw in our dividend portfolio. So, some of you might be wondering, like, why would you, put your money behind these companies then? Why would you invest with them? Well, the key here is that the goal here is to see that our investment, although the market has been down for a bit, growth companies had been attacked for a bit, we continue to chip into this portfolio because it was allowing us to buy our stocks when they are down at cheaper prices. So when things do work out well for them, when they do take off running, you're going to have more stocks of that company at those cheaper prices. And that will help you with seeing larger returns when it does start to run. Now, again, they're growth companies. So these are companies that we think will do better in the future. And, of course, I don't think anyone invests in a company that they don't think will do better in the future. But what I mean is the growth aspect of what they will be seeing is you're hopeful that it will be drastically larger. It'll be much more than what you would see from value or from dividend paying companies, dividend stocks. So that's why we continue to invest in these companies. That is why I'm not fazed and not too worried that we are still down almost 20%, right? Because in another 6 months or another year, we might actually be up 6%. And unlike our dividend portfolio, you're not going to see, things jump so drastically from, we're up 7.18%, then it goes down 5. Like you're not really going to see that on the dividend side. Here with the growth portfolio, it absolutely is possible that this continues to be a somewhat of a trend. The goal is to see it all in the green, and you want to see it increasing by, we're down 20%. We want to see this up 20%. And I'm hopeful and optimistic that we will, which is why I continue to invest $25 every week into this portfolio. So, my friends, I hope you guys found this video insightful, motivational, encouraging as you continue or start your investing journey. Remember, we started both of these portfolios with only $100, and this portfolio currently stands at $1,238.78. And one thing I will point out, if you're new here, you will not see that additional $500 boost that we had with our dividend portfolio. Stimulus check came, I put some towards bills, put some in our growth dividend portfolio, and then the other, maybe we spent it, we treated ourselves or whatever. But so that's one thing I want to point out that you'll notice that's different. So don't necessarily look and say, oh, your other portfolio is up so much more money. Well, I didn't make that $500 additional contribution to this portfolio yet. The other thing to notice is that there are 1, 2, 3, 4, 5, 6, 7, 8, 9 slices or companies that we have in this portfolio, whereas our dividend portfolio actually has 10 slices. So the next move that, I've been thinking about for a little while is I kind of stopped thinking about it recently, but is what is the 10th company that we would like to add to this pie? Now, of course, we don't need to add 10, but I kind of want to just round it out, make it 10, and have them both be kind of more comparable in that sense. So I'm open to hearing your thoughts. What growth company do you think we should consider adding to this portfolio? And, we can add a ETF if we want, or, it doesn't have to be a single company. But, so that's something to keep in mind that I wanted to throw out there in case you are new to the channel, new to these updates that we do every weekend. So, definitely as a whole, I'm not mad. I'm actually pretty content and satisfied with the way this portfolio, as well as our dividend portfolio, are looking, considering the market that we've been in. And with peace talks, between Russia and Ukraine looking pretty good, seeing Ukraine making good progress and whatnot, holding strong, it's even more promising and comforting that, this portfolio should be doing even better in the very near future. So if you guys also want to start to grow your money and, get your money to work for you, similar to what we're doing here with our growth and our dividend portfolio. Remember, we started this with $100 and only been contributing $25 every week, aside from that one additional larger contribution. Otherwise, it's just been $25 a week. So don't say you don't have enough money to invest. If you have at least $25 or even less, you can do this as well. And it's all about that dollar cost averaging approach and just being consistent where you just continue to invest every week. Don't stop. You start to make some extra money. Okay, maybe you can throw that extra money in here in your portfolio and get that money to work for you. Don't go out and splurge. Yeah, treat yourself, live life, enjoy life, but also be considerate and mindful that, hey, you might be here in another 10 years, 20 years, 40 years, and you might need some money to help you with living life and getting by and living the life that you want to live. And sometimes you have to take a sacrifice or make a little bit of a sacrifice or large, for the time being so that you can enjoy the fruits of your labor and live the life that you want down the road. So, my friends, again, if you found this video helpful and motivational, encouraging, definitely smash that like button. I do appreciate you guys watching, and feel free to leave a comment down below with your thoughts about what new growth company or, ETF and whatnot that we might want to add to our growth portfolio. And again, this is, April tends to be a pretty good month for stocks, and I'm hopeful that it will continue. We'll continue on our streak, and things will continue to go well this month for both of our portfolios. So I'm going to wrap it up there. Much appreciation for watching. And, if you haven't already, like this video, subscribe to the channel, hit that notification bell so you guys can stay up to date on all of my latest and upcoming videos. And be sure to check out one of these other videos in case you want some more motivation or maybe you need some help to make some money. But all right, my friends, you already know what it is. I got to keep it moving, but I'll see you in the next video. Peace.